Man.
For sure. Well, appreciate that. For those that don't know me, my name is Zach. I've been trading full time for about 3.5 years now. As I mentioned before, I'm from Long Island, New York. Now I'm living in New York City. Was a former college baseball player, and now I'm an analyst in the Stockdads Discord. And so, I like doing these webinars because it kind of allows me to come full circle. Because I was once in kind of your guys' shoes, where I'm just kind of trying to grasp any type of information that can help me along my journey, and safe to say I did all the wrong things at first. So now I'm trying to help expedite that process for others, right? And so naturally, most traders, I'd say not all, but most traders start somewhere in the same kind of realm. And eventually they're just trying to start out, right? Whether that's, they're following a friend, following a Discord, doing it on their own. They're starting from somewhere. And somewhere usually means you're not using a ton of capital, right? And that can mean you don't have a lot of capital. It can mean you don't want to use a lot of capital initially. But for the most part, I would say majority speaking, right? People start out with kind of a smaller amount. And so now today is going to be solely focused on how to grow that smaller account. I'm not here to teach you exactly how I get my setups. I'm not going to teach you, quote, the secret sauce, right? That has its own separate time. I'm now teaching you guys kind of the back end, the management, the psychology, how to kind of reverse engineer your positions when taking options to make it work. Because most people don't actually know. I don't want to call it a science because it makes it sound more complicated than it really is, but most people don't really get the science behind actually how to grow any account, let alone a small account, right? And so I like to ask a couple questions before we get into it, just because I want to get a general idea of kind of who I'm talking to. And a lot of these questions I, for the most part, know the answer to because I, in one point, would have said yes. So a couple of these questions, just write it in the chat. You can do yeses, thumbs up, anything. Just signify a yes or a no. Is who here, by generally speaking, thinks that they're trading or using a small account? Let me know in the chats with either yeses, thumbs up, me, anything like that. Right. And I will say too, while we have a lot of people saying yes, me, right? What I'm going to teach today works for any size account. And when we get into the sizing template, you guys are really gonna be able to see that, right, firsthand. Honestly, guys, this is I was gonna come back to this afterwards, but someone in the chat saying what is small less than 10K? And truthfully, in my opinion, there's no such thing as a quote small account because if you're able to participate in the stock market, that's a blessing and reward as it is. And everybody starts somewhere, right? So obviously, unless you have like $20, right? There's no small amount because one thing that sometimes, including myself, get lost with is that it starts to feel like a video game at times in the stock market, right? Where in minutes you can make hundreds or thousands of dollars, right? And so, it's good to take a step back, realize that there's no small amount of money, Obviously, if you have $5, $10, it's a different story. But, um, for the most part, you kind of mentally know if you're using a smaller amount compared to most of your peers, that you've seen in the, kind of the trading world, right? So then the next question, and in theory, I probably should see less people, if any, but we'll still ask it. Who here has turned a small account into a quote larger, more substantial account? Anybody in the chats? Yes, one time, couple people, but not nearly as much. 800 to 2K, then blew it. Yeah, then lost it all, turned my small account to zero. See, didn't last long. And see, that was my next point is that small account challenges that you guys know have probably heard about, right? They can be great. Obviously sometimes they're more risky than others. Some people in stock dads have done really, really well with them. But the reality is that's somebody holding your hand for you. So if you're lucky enough to latch onto a small account, challenge and do really well, if you're lucky enough, to do well, right? And to turn that small account to something larger, right? But you're not prepared to take the next steps, what's going to happen is what happened here. You guys are going to lose it all, including myself. I lost a ton of money when I started. Not only lost a lot of time, lost a lot of money, I made a lot of money, then lost that as well, right? And so keeping money, I always say making money is easy, keeping money is hard. And that all kind of goes back down to how to reverse engineer positions, which I'm going to get into. And it sounds a lot more complicated than it is, but when I explain it, it really is simple. A lot of the stuff that I'm teaching for the most part is a little bit on the simpler side. Some of it is a little bit of that kind of secret sauce, so stay tuned for that. And I kind of put my spin on a couple things, right? And so here I should see a couple, more people kind of participate here. Who here is using a small account and just feels like they're not really making progress? They've been kind of they've been at it for a while. They go up, they go down, make some money, lose some money, right? And they're just kind of stuck treading water. Because that's the biggest thing is a lot of people are trading that small account and you're kind of just waiting for that breakthrough. But some people, unfortunately, don't even know how to put themselves in position for the breakthrough. And I'm going to kind of break that down, right? And then the last one, I have 25K, literally make money, lose it the next day. Exactly. Yeah. That's what I'm here for, truthfully, is for the people who are struggling still, who have, quote, somewhat made it out a little bit, figured it out. So you guys don't lose that, right? And here I'm hoping to not see many people, but if I was asked this many years ago, I would have to say yes as well. Who here at some point unfortunately had to reload a small account, meaning they lost their entire account and had to redeposit some amount of money in there? Yes is me as anything. Every week, me too. Gotcha. Numerous times, multiple. And listen, I trust me. Listen, I'm grateful for every step of the way of my trading journey. But when I first started, it almost seemed normal to do that. While there is a strategy that I'll talk about, but it's definitely not the most kind of fun, I should say. And so I've turned small accounts into larger accounts, partially for kind of my own personal challenges, partially because, at times, maybe you guys have seen on social media, every earning season, at times I would reset my account, throw a couple $1,000s in it, and just kind of see what I can do with minimal risk. I've turned 2,000 to 20,000 in a month, 1,000 to 10,000 multiple times, five into 50. And again, I've been doing this longer, so it is in theory simpler, but it's not simple because I have this magic button I can press. It's simple because I know how to grow the small accounts, right? And there's really three ways, really two, but there is the one that I'm going to talk about here in a second. But there's really three ways, right? And the first one I'm going to get into here, it's, you know, but actually, before I get into that, I'm gonna just show you a couple things that'll kind of make this a little bit easier, right? So I'm gonna share my screen here. Oop, I sent a request there for Lear to share the screen. Perfect. So a couple more questions here. Um, and then this right here, in my opinion, is a couple things. There are a couple things here that I think a lot of people do wrong or potentially teach wrong. Okay. So if you guys are not familiar, there's a tool on TradingView, which is the platform I'm using. It's called the risk to reward, the long position, short position. And basically, you can set this up for any time frame, any stock, any position. And you can basically say, okay, here's my target, here's my stop loss, and you can kind of see it visually, right? And this will tie into kind of what we're going to talk about in a bit here. So hear me out. So I'm just going to use the daily chart here for the S&P 500. And imagine we're taking a long here at the current price, okay? At the current price. And so let's just say we're making it very, very simple. We're going to put a stop loss beneath this low right here. And we're going to target, let's just call it a 1.5 to 1 risk to reward. So this would mean a new all-time high. Okay. So if you go to this tool, what is this telling us? Well, if we were trading stock, which is the key thing here, we're trading options for the most part, and this obviously works with stock, but the focus here will be options. We're going to be risking about 2% on the stock, aka $13, to make about 3%, almost $20. So now the thing is, if you're buying shares, right, you know exactly how much you're going to lose if we get down here. How much are you going to lose if you stop out of this position? 2.1%. Excuse me, 2.1% on your position, right? Now let me ask you guys. Options trading is a bit different. Options trading is a bit more challenging when it comes to figuring out potential profit targets and potential stops. So I don't want to hear how or anything like that. But I have a question. Could you guys, or do you guys have a general idea of how to just go about figuring out what your stop loss would be if you were to stop out on this trade via the option chain? Let me just see in the chat, yeses or nos, if you have any idea. I know Frank should know because I taught him. No, no, no. Option chart. Option chart potentially, but not as much. Yes, no. So it's definitely a mixed bag with a lot more no's. below the EMA, correct, but there's a way to actually figure out how much. The option chart potentially could be rigged, but I'm going to show you guys the easy way in a little bit here. Um, and so the thing is, right, many people, before they even enter the trade, even if they're properly sized, don't know the simple trick I'm going to teach you guys about the option chain. It's not that complicated, but just not a lot of people do it. And it's something you guys can literally implement tomorrow without any secret indicator, without any secret course. You guys can start implementing this to your trading tomorrow, regardless of what strategy you use. Okay. And so just understanding that risking 13 to make 20 for a 1.5, risk to reward, it doesn't actually mean in the long run for your options that you're going to risk X to make Y. Because options, you have to realize they move independently, but also codependent on the stock. And because of that, you can't properly and accurately, without my kind of simple trick, say that this is a 1.5 to 1 risk to reward. In the long term, even if you continue to take 1.5 to 2.5 to 1 trades, the stopping out could actually hurt you more than you think. And that's could be one of the reasons why you're kind of just treading water, right? The Robinhood simulated returns, honestly, is not that good, I found. It's close, but also it doesn't really hit home like this will, right? And so I'm going to show you guys the option chain in a second. But the first thing I want to talk about when it comes to the actual trading of a small account, right? And we'll get into the sizing template in a second. The number one kind of, I would say, oddity is if you're trading with a small amount of money, but you have a lot of capital on the back end in the bank account to work with, right? That's kind of like the anomaly. There's not as many people out there that are willing and able to do that. So I just want to cover that first. It's really quick, very simple, before I actually get into the real kind of meat and potatoes of this, where, when you are trading with more capital in the bank, you can basically, when I start talking in a bit, kind of multiply the positions. So if you're using 10%, you can make it 20. And I'll talk about that in a bit. But I just wanted to kind of cover that before we got into the actual examples of, what you actually can do to grow the small account. So before we get into that, the indicator, this is just called a long position, guys. Long position on TradingView. So I'm going to now. I'm going to share my screen. You guys should be able to see the option chain, right? And so I'm going to teach you guys the super, super simple way to calculate, for the most part, within a couple percentage points of take profits, of stop losses, without even really needing to know the Greeks. I'm sure most of you guys who trade options, and honestly, including myself, I could be a bit guilty here. I don't fully know 100% what each of the Greeks mean. I know the basics, obviously, of theta, what theta is, gamma, delta, I know the basics. But I'm not in here calculating the delta and the gamma and the theta if it goes against me, if it goes in my favor, right? I'm showing you the simplest, easiest way to do this. You guys ready? Okay. So right now I'm on the option chain right here for Shopify, right? You can see right here that the last traded price was 154.9. The reason I did that is because it's as close to it in the money strike as I can get. Okay. And again, this is the simplest way to do this. Okay. So we're just going to imagine that this price is currently at 155. We're frozen in time. We're at 155. So we have the bid and the ask at 4.8, 5.0. We're going to imagine that the mid price is 4.90. So if you were to enter one contract right now, obviously the market's not open, but in theory, if we were open, and this is the August 15th, $155 call, it would cost you $490 for one contract. All right. So now you're going to say to yourself, how do I know potential, take profit areas based on the chart, right? And so I showed you before, you can have set up something such as, a $10 target and a $5 stop loss. But in the long term, it actually won't be helpful. And so this is exactly what you do. So let's just say, for example, you're in the 155 call and you're targeting 160. Very simple numbers that we're using right now. all you're going to do to get a pretty dang close ballpark estimation of what your contract will be at 160. You're not looking at any Greeks. You're simply going to look at the option chain. If your $155 call gets to 160, in simplest form, what is that going to be? $5 in the money. So at the time of entering the position, what you're going to look at, the 155 call. What is the $5 in the money strike worth? Because that'll get you a good ballpark as to how much your contract's going to be if it hits that target, which is $5 out of the money, which would be $5 in, right? So if we get to $5 in the money, you can see right there, the contracts here are 775 to 795. So those contracts ballpark will be about 7.8. It'll slightly vary if it takes longer to get there, obviously, because theta plays a role, but you can be constantly checking this. And for those in the Discord, you guys know I'm constantly checking the option chain because sometimes there'll be a trade that I love, good R to R, good levels, a lot of room, but the option chain doesn't make it easy to trade because if you do the premium math, you'll see that if you get a big move, it may not actually be worth it, and the downside would be equal or as much. So you can simply just go see what we are, $5 in the money, 7.8. So you can see, okay, if I'm getting in at 4.9 and it hits my target, it's 7.8. Now what I'm going to do is say, let's just say we're in the $155 call strike. All right. And let's just say I want to keep it just simple to a one-to-one risk to reward. Just keeping it very simple for this math. $5 target, $5 take profit. All right. So what we would then do is say, what would my stop loss be roughly? And so now you do the opposite. So at that point, you'd be $5 in the money. Now you'd be an additional $5 out of the money. So you now go $5 above and look at what the $5 above would be because that's what your stop loss would be. So that'd be the 160 strike. So now you can see that the middle here is 2.9. The middle here would be roughly 2.85. So roughly there, you're going to be risking $210 per contract. And I'm going to do this the math very simple in my brain because after the market closes, my brain turns off. So roughly right there, you're going to be risking about 42, 43%. So now you can just do the risk to reward. Even with a a $5 stop, a $5 take profit, you can see that if your stop loss got hit, it'd be about a 43% loss. Now, if you saw here, right, it was 4.9 to 7.8. Let's just call it $300 to make it simple. 300 divided by 490. So now if your target gets hit, it would be 61%, right? And so even if the R to R is 1-to-1, you can actually see if your stop were to get hit, it would roughly be a 43% loss. And if your target got hit, it would be roughly a 61, 62% gain. So actually, despite it being, quote, a 1-to-1 on the charts, the options are telling you slightly something different. And this could be in your favor or this could go against you, and it all kind of depends. But this is the simplest way to calculate it via the option chain, right? And we can just do one more example here. Go to, let's just do Apple, make it very simple, right? And again, this will change slightly day by day because of the Greeks, because of theta and all that, but you can constantly, be keeping updated on that, right? So this one's a bit trickier because as you can see right here with Apple, so I see someone saying you won't have time to do this on Momentum. I'm doing this lots of money on SPX, but that's why you don't trade 0 days, guys. That's why you don't trade 0 days. But so right here, right, it gets a little bit more tricky. And this is why I want to do this example. Right now we're at 213.27, right? And so now there's no 213.2, the 213.5 strike. So now it's in the middle of the 215 and the 212 and a half. So now again, you can kind of reverse engineer that again and say, okay, let's just, use let's say a $6 stop, a $6 take profit this time. So a $6 stop, a $6 take profit would roughly mean that the 2075s would be about at the money. So the 215, just for simplest terms, right? The 215 and the 212.5, right? It's going to be somewhere in the middle there. So it'll be somewhere around like the 777s, right? 7277. Excuse me, the way I said that was funny. So now if we're having a $6 $6 stop loss, that would be closer to this 220 strike. Not quite there. So you can see the 220 is about 1.5. So figure, there's no exact math, but it would be roughly between the 220 and the 217 half, closer to the 220. So it'd probably be about 1.7. So in this case, you're probably doing similar, risking about 40% to make about 50, 60%. Does anyone does anyone have any questions about that before I continue, guys? That is the pretty much simplest way. Simplest way. Any questions about that at all? Any questions, comments, concern? Makes sense. Can we do one more? Absolutely. Let's do Amazon. Everyone likes Amazon, right? August 15th. So this is actually a pretty solid one here. You can see the Amazon right here, 222.3. Okay. So for the sake of this example, we're just going to say it's 222.5 smack on the dot at that 222.5 strike. So the mid price there is 3.75. And again, we can just use a $5 stop, $5 take profit again for simplicity. So if we get $5 in the money, the 3.75 would be roughly about at 6.9. Okay. So you'd be making roughly $300 on that. Now, if you get $5 out of the money, meaning Amazon drops from 222.3 to about 217.5, right? So your stop loss will get hit $5 down. It would be roughly the cost of what the 227 halves would be worth at the time of you buying that. So let's just say, for example, right? We can always talk about the take profits. That's the easy way to kind of understand it. If from the let's just say we purchased this call right now and the market's open. If from the moment we bought it and it immediately had zero ups, zero green, it was not positive for 1 second, and just from the moment we bought it dropped, it would be pretty much around the 1.75 area for the exit. And again, it will vary slightly because of the Greeks, but this gives you a really solid kind of ballpark. And so before I enter any type of trade, I know exactly for the most part what the contracts will be within the next day or two, or what they'll be to the downside. And obviously, if I'm having a multi-week or multi-month swing, with contracts that are months ahead of time, this will change every day. However, because we have a lot more time, the Greeks won't get impacted as much, and there won't be as much fluctuation here, right? Um, and guys, I know the chat's moving right now, and I see some questions. I'm gonna leave some time for the at the end for some questions. So make sure you guys remember that because I do want to get to everything. So again, $5 stop would mean that it's worth about $5 out of the money calls. $5 target would be about $5 in the money calls. That's the simplest way to do it. Obviously, we showed a couple clean examples, one not so clean example. They're not always going to be that clean, but you can at least get an accurate ballpark. Sure, maybe you could plug it into AI, right? But this is a way to do it on the fly. You're watching the option chain anyway when you enter a position. You can just do the math very simply. There's no complex formula. It's, obviously you have to have proper targets and stop losses, but barring that you have that in place, you're good to go, right? So, next thing I want to do here, before I get into how I actually kind of run my small accounts, the first thing you have to do is be able to reverse engineer your positions. That's what we just did here with the option premium. We reverse engineered the positions. What do we mean by that? We figured out if we enter the option at this price and it gets to X or Y, to the downside or upside, what will our contracts be worth, roughly, right? And we figured that out pretty ballpark, pretty simply. Now we have to do the same with our position sizing. So we just figured out if, our stop gets hit or our targets get hit, what the impact will be on the option. But now we have to figure what the impact will be on the actual position and or account. All right. So, bada bing. So, you guys are going to be able to get this at the end. I believe we'll do some type of email. This is my sizing template. Okay. I used to use this every single day. When you guys get this, I suggest that you do use it every single day. This is a great tool. In my opinion, and this is not just because I'm doing this webinar. You can ask any of the mastermind students any of that. My number one, my number one piece of advice for new option traders, master position sizing. You could have a bad system. You can have the worst psychology in the world. Obviously, you need that to be good, but I'm just saying in theory. If you can really have a firm grasp on how to properly position yourselves based on the chart, based on the option chain that we just showed you, that puts you ways ahead. And this is really how I'm able to grow a small account. I basically have this in my brain, but I'm going to show you exactly what this is. And you guys are going to be able to have access to this. So you can see right here what you can do. There's three different tabs. This is number one, number two, number three, B, D, E. Every day you can input your account size to start the day, or you can input your buying power or both, whatever it is. So I just had $5,000 in this. So I'm going to change it. I'm going to make it 12,444. Oh, at 55, whatever. So now I'm going to change this to 5%. So now I started the day with $12,455. I am going to be able to put 5% of my portfolio into this trade. And again, it could be more, it could be less. It doesn't really matter, right? I'm just kind of showing you here. So if I were to put 5% of my portfolio into a trade, what would that actually be? Well, that would be $622.75. And now you can again use all these numbers and reverse engineer your position and your risk. And you guys can see the exact outcome of what were to happen for that trade in dollars and in percentages. You can see if I put in 5% of my portfolio, $622.75, and I make 25% profit, I will make roughly $155.69 or 1.25% of my portfolio. The outcome would make the portfolio then here. And you can do this for anything. So you can see, okay. And again, obviously, you can have trims when you're taking options positions, or you can scale out to the downside, but this gives you general ideas, right? Which is how you're able to reverse engineer things, right? Some positions require a larger stop. Some positions require a tighter stop, right? There's no two positions that should be managed or sized the same. Everyone always asks me, how much am I risking? How much do I usually put in? How many contracts do I buy? The answer is there's no one answer. It varies. It varies by the trade. Position sizing doesn't mean confidence. That's its own separate thing, which we're not talking about today. When I signal something in the Discord, I never signal something that I don't have 100% confidence in. Okay. If I don't have 100% confidence in something, I simply don't signal it. And that should go for you guys, right? If you guys are taking a trade and you're not 100% confident, don't enter. However, certain trades require a larger stop than others. Doesn't mean it's not an A plus trade. It just means it needs more room to operate, right? Last week, we took like 4 trades in UNH. The first three all went 100 to 200 plus percent, but we had a little bit wider stop on each of them. None of them got hit, but it was required because if it did end up going against us, it would have been a larger loss. But it would have been, obviously ended up being a good gain. So you have the dollar amount there, and you can change this to whatever you want. If you want to put 10% in, so you could see, exactly how much you'd lose, and you could see, if you lost, or well, actually, this is the gain, but if you made, 110%, what that would equate to for your account. And then the last thing you could do is this has a little drop down menu, gain or loss. So you could put this as a loss, right? And obviously, you can only lose what you put in when you're just trading naked options. So, if you put in 10% of your account, it would be $1,245. If you lost the entire thing, your account would lose 1,245 and get down to 11,209, right? So I suggest you guys do this every single day without fail. And, you know, not only to the upside, everyone's always focused about the upside, right? Which is great. But your number one priority as a trader should be focused on how can I limit my downside? How can I limit my downside while also still reaching maximum upside? You're never going to get the entire thing, right? And I always say that about things. You're never going to catch the entire thing, but if you catch the bulk of the move, a piece of a pie, you'll always come out on top. And by seeing these percentages and seeing the impact in dollars and percentage to your account, it can kind of help you with that. And this is great, but now you have to take the step back that we just did and understand how do we even figure out these numbers and how to size and what to do? Well, it's based on the option chart, right? It's based on the option chain. So it's based on the stock chart and then the option chain. And again, you can have the most flawed system in the world, but you can still start applying these tactics right away. All right. You can literally start doing this right away. Um, Any questions about this before I move on to the last little piece, guys? Any questions, guys? Yes, exactly. Creating consistency, sizing appropriately, all that, guys. All that, 100%. You guys will get it. You guys will get it. Yep, you can do it every day, every trade, whatever you guys want. Use this as a tool. You can reset it every single time, right? How do you join the Discord? There should be a link somewhere. I think Lear has it where you can join it. So he'll put it in the chat. But I'm going to kind of get into the kind of so those are the two big pieces, right? Those are the two things that you guys can start implementing right away, which is how I grow a small account. Obviously, unfortunately, the sauce is not being spilled, not being shared today on how I actually find my setups, get the good targets, all that stuff. But now you can at least have the framework to put yourselves in a position to succeed, right? Let's just say you just followed a small account challenge that turned your account from 2,000 to 25,000. Now you can properly size. Personally, for me, again, everybody's different. I never like to lose more than 3 to 5% of my account maximum. It depends on the trade. If a trade has a lot of potential, it could be a little bit more, a little bit less. So what does that mean? Well, it means that if I only want to lose 3% of my account, let's just say, and again, that's just a random number. If I put in 10% of my account, I have to have a 30% stop. I don't really like having hard stops. So I would probably put in a little bit less of the account, right? Less is always more. When you have less, it has less emotions. But when you have a small account, naturally everything is less. So I'm going to kind of get that into this in a second here. All right. So I kind of made a little checklist here. I can maybe even send the checklist after you guys, but there's really two different ways to grow the small account. And there's only two. Okay. And you have to figure out based on your personality what avenue you want to take. There's no right answer, there's no wrong answer. It's just based on personal preference. So we've already talked about on the option chain how to set it up for winners, how to set it up for losers. I just showed you this sizing template, which you guys will all be able to have and play with. Okay. You guys have two of the three big pieces already. Okay. Lastly, you have to figure out what kind of trader you want to be. Again, you have to reverse engineer everything. Figure out what you're doing, what you're trying to achieve before it happens. Okay. So you have to figure out, and there's really not a whole lot of in between here, at least at first. This is kind of option one. You take steady base hits, you take your profits early, you secure gains, and you don't really have many runners. All right. I listed out some pros and cons that I'm going to read to you guys. Some of the pros, you're securing the gains constantly. Okay. You're constantly locking in the gains, aka the base hits. Number two, you don't see the unrealized gains evaporate, right? And that could definitely help your mental. All right. Number three, this is also another big piece for the mental that people don't realize. By securing green, and again, I'm not saying 5%, 6%, 8%. I'm talking about, if you have a 25% target, right? Boom, securing those, right? If we're having a 1 to 1.5 R, for me, I'm not someone that all the time has these huge, huge, huge R to R winner targets, right? And we'll talk about that in a second here. So by allowing to see green more often, it helps your psychology, it helps your mental and save that mental capital, right? Less fluctuations in P&L, right? Kind of piggybacks on that, right? If you're someone that hates seeing a green trade go red, and again, we have to realize that there's a difference between letting a green trade and a good trade go red and just seeing green, taking green, right? Because if you do that and you don't let the trades play out, that's actually more detrimental, right? We're talking about we're hitting our first main target, and rather than letting some runners go to our second and third, et cetera, targets, that we're just closing up shop early. Because again, the market can do anything. The market can pull back, it can continue, it can consolidate, and we're going to talk about that in a second. With taking the base hits, naturally you can have simpler R to R metrics, right? You can be someone that's a 1-to-1 trader, 1.5 to 1 trader. Personally, for me, I've found for futures especially, it's better to have a smaller R to R. I'm usually a 1-to-1, 1.5 to 1, sometimes 2 to 1. But I found for me that's best. My win loss is about 77%. It just is what it is. I know my stats, they are my stats, and that's just what they are, right? And the big thing here about the taking the base hits, and again, everything is different, and sometimes you're not able to, but by taking the base hit, by taking your entry, taking your exit in full off the table, you now have a clean slate, clear mind, and you can always re-enter the position if you get a pullback. It's very unlikely that you're just going to enter at one point and just going to continue to run all the way to the moon with no other entry. And if that's the case, you tip your cap to the market and you move on to the next setup. All right. So those are some of the pros about, kind of being a base hit type of trader when it comes to a small account, and some of the cons. You don't see the larger wins. So what does that require you to do? It requires you to really respect your stop loss, because you can't have the oversized losers and small winners, right? Number two, you need to rely more on the win rate, as I mentioned, which is definitely valid. For my futures trading, I'm pretty much exclusively just relying on my win rate being high. My win rate's about 77%, like I said, with about a 1 to 1 point. I think on average it's like 1.2%, 1.2 R, meaning, I make 120 and I lose 100 per win and loss, right? And so you don't have to rely as much on, you know, R to R, but you have to rely more on win rate, right? So if you have a steady strategy, that's something for you. Another thing too, naturally, if you're not able to take these re-entries, right? Maybe you don't have the buying power, you don't get the re-entry setup. You may see slower growth because you're taking smaller gains naturally, but it still will compound, but you're not going to grow as exponentially, which again is totally fine. Trading, no matter how you look at it, even if you hit a home run, is still not a get rich thing long term, right? Um, and like I said, just overall, just kind of slower compound, right? So now you have that's kind of your first kind of character, right? Is you're the base hit taking profit. And the next one is personally what I kind of lean more towards when I'm trading a small account. You know, that's just because of my nature. I like to hold for the bigger winners, right? It is a little bit more challenging mentally, but again, I'm gonna read off the pros and cons. The pros is you can compound the account faster because you're able to hold those big winners. But that does require kind of a better system, more trust in your system, and just, kind of the proper entry, right? Because I always say an improper entry will cause an improper exit. And then also an improper size will cause an emotional decision. So those are the two things there. Um, Another pro about getting the bigger winners is that you can size smaller. You now have a larger R to R you're holding for bigger targets. You can now potentially size smaller. On top of that, you can focus more on the R to R, right? Even if the probability is less. So let's just say normally you're a 70% win loss, right? You could drop that down to maybe a 55, 60%, but you can have bigger R to R targets, hold on to those winners. You guys probably saw on social media. I initially entered some hinge calls months ago. They finally got to almost break even today. I exited the majority of them, but I also took another entry today, a re-entry today on a different account, and those contracts went about almost 400% in an hour. And I was able to hold, I held the majority to 100%, held some to 200%, only a couple to 400%. But just holding one or two contracts at 400% for a small account, it's game changing, right? And like, the contracts that I'm getting are not, the ones I bought today were $65 each, so they're not huge. There's something that a small account could buy a couple of, you know? Um, Another big one too that people don't talk about enough is that when you're looking for bigger plays, it does two things. One, when you're looking for these kind of big targets, these really nice, clean, open air moves, you take less trades. So if you have the discipline to do that, it'll save you so much mental headache. Your mental capital will be great. You can really lock in, and it forces you to take only the A plus trades. So many times people in these small accounts will be like, I have a $1,200 account. Let me enter a $50 SPX or a $100 SPX. If I lose half of it, it's not a big deal. Well, guess what? If you enter a $100 option on a $1,200 account and you lose 50 bucks, that's a couple percentages of your account. It may not seem like it, but just being able to have the discipline to avoid trades and stay out of trades that you shouldn't be in, that'll take you to the next level, right? So now I'll talk about a couple of the cons here as well. You're gonna have more P&L fluctuations. So if you're someone again that doesn't like to see P&L fluctuating, if you're someone that stares at the P&L chart, right? I'm up 80%, 90%, 20%, 50%. If you're one of those guys, maybe not for you, right? Because of that, more emotions can come into play, right? Naturally, when you see money come and go, your emotions can come into play. If you maybe again, if you're not disciplined, if you don't have trust in your system, if you don't have the proper system, right, you start questioning things. Your brain starts going crazy, and you never want to make emotional decisions while trading. If you can have the discipline to not do that, then that's great, and this could be for you, obviously. Um, One of the things I will say too, which is kind of the opposite of the first one, is at times you won't be able to quote fully capitalize. I'm someone that likes to do that also, where let's just say, for last week, for example, UNH dropped from like 265 to 245. I was able to take four different entries. And so I was able to take a good size like four different times. If you're someone that just wants to hold, at the end of the day, you may have one or two contracts that are up crazy, but it may have actually just made more sense to enter multiple times rather than just hold one or two through all of the drawdowns, right? So that could be tough. And then, kind of going back to what I said before, seeing the fluctuations, seeing the unrealized gains that could be there kind of go down does take kind of a toll on you at times. So you have to be kind of mentally tough for this. And then for me personally, guys, I like to do somewhat of a hybrid of this, but definitely lean more towards the kind of bigger winners, the bigger winners, because for me, I want to have that conviction, Again, this is no knock on anybody or anything, but I always say in options trading, you can get 5 or 10% by accident. You can make 5, 10% gains by accident. Usually 20 to 25 to 30-ish% is my first trim typically if the trade is kind of going stagnant or I just want to reduce some risk. But I really try to take my first heftier trade anywhere between 40 and 60%. Some of you may think that's a lot, some of you may think that's not a lot. But again, you can determine all of this via the option chain that we just talked about, right? And so now we're just doing our checklist. We're figuring out what type of trader we are. We're figuring out, okay, what size we're going to be using for said trade, but we can only figure out what size we're going to be using by figuring out our risk and potential reward via the option chain. So you have to kind of figure out those three pieces. It's kind of like a triangle, right? Figure out each corner, and that's kind of the perfect storm, the perfect recipe, essentially. And again, there's no right or wrong. And in theory, you could take some pieces from each of them, the pros and cons, right? From each. And they're not overly conflicting at times, right? You could be someone that says, you know what? Depending on exactly my position size, I'm always going to take one contract off at 30% or whatever it is. I used to do that, stop doing it because I want to let the chart dictate when I take my trade, when I take my trims, right? But you could set up certain rules for yourself that work. At the end of the day, I could tell you all of this, but it does not matter because you have to just take bits and pieces from everything and everybody out there and formulate something for you. I am very biased towards my strategy and especially towards some of the thinking that I showed you today. I think this template is extremely simple. I think the option chain is extremely simple. And so those are things that you can start implementing literally right away, right? And like I said, for me, I am not in a spot, knock on wood, gratefully, where I need to grind $1,000 account, right? But let's just say I was, and this will kind of be the last piece for the night here. I can just start with $1,000, right? And I can risk, there we go, 10%, right? If I risk 10%, let's just say, turn this into the gain side, and I were to make 20% on my trade. Net 20%. It's 20 bucks. It may not seem like a lot, but do that every single day for a week, and now your account's up over 10% on that week. Now they do that every single day for a month, and now you're up even more. Do that every single day for a quarter, now you're up hundreds of percentages. And at some point, you continue to have these habits. You instill these good habits now. Now you're trading with a $50,000 account using these same kind of similar thoughts and principles. Now you're making hundreds of percentages on a $50,000 account, and you're like, damn, I didn't even know this is possible. And I always say, right, if you can't manage a small account, there's no way you can manage a big account. All the principles still apply, right? That's pretty much all I got for tonight, guys. Today it was really focused on talking a little bit about the psychology as I did, but really trying to, build the framework for how to go about trading a small account. I'm not here showing you the trades. I'm not here showing you, in quote, the sauce, unfortunately, for you guys tonight. But again, these are things that you can literally implement tomorrow. So I'm going to now start looking at the chat, seeing if we have any questions. If Lear has anything to say, feel free. For now, I'm going to stop the screen share.
Oh, you're roboting there at the end. Roboting a little bit. Listen, guys, I mean that's why Zach wanted to do this. There's no sales tonight. There's no promos. So if you're waiting around for that, that's not what this webinar is about. It was literally Zach asked the team to come on here and do a webinar because and I'm speaking from personal experience myself. I still battle with it. Formulate the large part of your trading plan. That's what this is. That's what tonight is. And you just take a little bit from tonight. We will get you Zach's template, so everyone that's here on the Zoom call will get it. It will come to your email. Give me a day or two, but you'll get it. Um, but this is literally just a free webinar. Zach wanted to put it on. Um, and it does, I wouldn't say give away sauce. We're not trying to gatekeep this, but this is honestly, this is a big crutch that people have. You can take a mastermind and learn Zach's strategy, which I'll drop the wait list in so you guys can sign up for Zach. He's freaking amazing at what he does. But this right here is a large portion of why you're still not successful. And it comes down to, it's really easy, right? We talk about it like, oh yeah, it looks really easy, but
Yeah.
we still have
And
trouble
also,
keeping. And this template keeps you honest.
yeah. And it's a good point that he just made because again, right now, I just made it in theory sound simple. But you have to realize when you're like trading in real time, right? And again, someone joked earlier about the SPX, by the time I can calculate, I lose it all. First of all, that's why I don't trade SPX because I don't like when my brain has to move a million, seconds a minute. But you have to do this in real time, right? And so it's going to take a little bit for your kind of brain to get used to it, especially because right now the market's not moving, right? So we saw that contract was 3.8, right? At times there'll be times where I'm doing the math, and just in 20 seconds the contracts go from 3.8 to 4.5, and now I have to readjust that thought. I kind of have a good ballpark to start, right? But when it's happening in real time, it is different. And so I'm seeing some of these questions, which I'll answer really quickly. Um, to avoid the pattern day trading rule, they're actually potentially changing that. But until that happens, open a cash account. Cash account can have unlimited trades. Just you have to use whatever buying power you have. So if you have $1,200 to start the day, that's all the buying power you have. You can take 10, $120 trades. I believe everyone should get the recording. Then someone asked something about my signaling, which is a good question. So someone said if I enter a signal and it's $500 and my account's only $1,500, what should I do if it's like a starter size? And the truth is you can't answer, you can't enter it. At the end of the day, and I always tell people this, and just being honest, especially considering the position that I'm in as a signal caller, as an educator, right? You're not going to make it long term. I don't care who you are. I am very biased towards myself and my system. You cannot follow me forever and think you can be self-sufficient and make money in the markets. Can you do it for a while? Sure. Can you learn from me? Sure. So you can use my ideas, use my strategies, but at the end of the day, you have to invest in your education somehow. And so again, if I'm entering a position, it's $500 and your account's only 1,500, guess what? You might have to skip it. And that's the problem with signals, unfortunately, right? I'm kind of telling you that, the real juice behind it is that one, you're not going to be able to follow all of them, even if you see all of them based on size, right? But then sometimes you might miss one or two. And then that's why long term, it's just tough. In May, I went 33 and 0, but that I hope happens again, but most likely will never ever happen again, you know? And so to answer that question, sometimes you're gonna have to sit out of trades. It's really that simple. But that's why it's even more important to really self-educate so you guys don't have to just sit there waiting for trades and hoping they can fit your account and your size, etc. Um, looking at the questions. So, good question about the options premium. When does it ever kind of not hold up? There's only really two times. One, when the IV kind of plays a role. So, one of the things is with earnings, right? IV can get pumped into it or can get pumped out of it. So, that's why for me, earnings is a complete gamble. I like the post earning trade setups. As you guys know, we crushed some yesterday, got a couple little ones today. But for me, the options premium doesn't ever get hit too hard. It's usually still ballpark around what it is. And again, I always like to give myself a little wiggle room. That's why I always size smaller. So let's just say, the first example we said if it hit my stop, it'd be 43%. Mentally, I'm like, let's just say something goes wrong and it just crashes through it. I would say my brain, I'm sizing for a 50% loss, right? You may not even need to stick to that 50% loss. You may be able to move your stop loss up. You just always have to think when you enter the trade, what is the worst possible case scenario? If the worst possible case scenario, majority speaking, without a black swan, is that you're going to lose 50% intraday, you size for that. And then if you're going to hold overnight, you can make adjustments. Also, again, like I said before, it all varies if you have a lot more time. if I, and just truthfully being honest with you, if I wasn't in charge of signaling and making sure that for the majority speaking, that everyone can get into my trades, all of my expirations would be at least 1 month out. No next week, no 2 week out. It would either be weekly expirations, for more of a immediate impact, more day trade overnight swing, or it would be a month plus. I don't want to ever, ever, ever let time ruin my position. I don't want to ever let something go sideways for a week and then because I ran out of time, I lose, and then it makes the move. Right. Just trying to.
Guys, that link for Zach's wait list is there. Listen, it costs nothing to sign up for the wait list. Just get the info. If you're interested, then it's there. If not, then you pass up on it. Um,
Yeah, and that's also a good point there. Again, like I said today, guys, it was not about really selling anything. It was really coming on here because I've gotten a lot of DMs, unfortunately, about people, you know, big and small accounts just blowing up their accounts from proper risk, improper risk management, improper psychology, not knowing what they're doing before they get into it. It's been, Discord members, Instagram people, TikTok, everybody has the same issues. And I was just like, I need to kind of get this, under wraps. And even people who follow these small accounts, whether it's from our Discord or not, I've seen people, unfortunately, in the Discord join these challenges where, Amar, I think, took a thousand to 10K over a period of time, and then they lost 10K. It happened to me. I remember one of my first ever Discord members when I was on my own. He said he followed all of my trades with proper risk management for 2.5 months, turned $5,000 into 19,000. For some, that might be a ton. For some, that might be chump change, but that's a really good percentage on your account. And basically, 1 quarter, he over tripled his account. And then he said he took one oversized loss, then got into bad habits trading SPX and lost $17,000 in 3 days. So his account went from 5,000 to 19,000 in 3 months, and then from 19,000 to 2,000 in 3 days. And so it just goes to show, guys, that lack of judgment, risk management, psychology, it plays a role. Talking, Pen
um,
is bred about the what you just said there. If I'm understanding correctly, you're saying when does it get out of the small mentality? The thing is, it never changes. The only thing that changes is the dollar amount. The percentages are still the same. That's why I'm not sure if you're in the Discord. I'm very bad with usernames, but I at times try to share my positions and show you exactly how many contracts I'm in, whatever, because I'm try excuse me, I try to be very transparent, but I find actually sometimes it's detrimental because people don't see the percentage. They don't care about the percentage. They see the dollar. They see I'm in $3,000 or $5,000 and they think, "Oh wow, it's a big position. He's confident in it." But meanwhile, I'm risking, $1,000 of that, and so someone else sizes up big, but if they lose $1,000, it means a lot more, right? And so it's all based on a percentage. So again, if you follow a percentage system, yes, it may take longer, but overall, it'll be definitely beneficial. The sleeveless sweaters from Banana Republic. Revenge trade today cost $1,000. Absolutely. Um, Reading the chat. SPX double. SPX made it for. Yes, SPX has hurt me very bad. I've taken some killer trades. I've made, 5 figures on one trade, made thousands in minutes, and then I would go pull up my lifetime P&L, negative 25,000 on SPX. And I've made 5 figures in a day, 5 figures in hours on SPX, and still negative $25,000. Um, I'm trying to see back if I miss any questions. If anyone has any other questions, feel free, guys. If I missed them, retype them. I think I got to most of them. I do trade futures, yes. It's slightly different because obviously it's not really based on dollars per se, because unless you're self-funded, most people have the prop firms. It's basically the same way. You have to reverse engineer it. And honestly, futures is easier because if you're trading ES, for example, if you let's say you want to risk 10 points, you know exactly how much that 10 points will be. It'll be $500. It does not matter if it hits there in a minute, an hour, a day, it'll be $500. So in theory, it's actually simpler. I personally, it's funny because my futures trading and my options trading are totally different. My options is very, very passive. I like to hold. Futures, I'm strictly a scalper. I like to be in and out as fast as possible. For whatever the reasoning is, I don't know why, I don't know how, because of how different and contrasting my styles are. But my win percentage under 15 minutes in futures is 88%. Above 15 minutes is 51%. And so I saw that I'm like, I have to just stick to my, I don't know what it is. And I try to hold. And then once that 15-minute clock hits, brutal. Um, Yeah, so when it comes to my actual trades, it's a bit different for what we're talking about here. For the most part, I wait for confirmation either under an EMA or under a level. It's the same thing with entry, right? You have to decide if you're a breakout or breakdown trader, and there's no right or wrong answer. I like to see breakouts and retests or breakouts and confirmation. Some people will take the straight breakout or take the straight breakdown. So regardless of what you are, right? So for me, because I wait for confirmation or a retest, I have to do the same thing to the downside. I have to wait for some type of confirmation, even if it means I lose a little bit more with options.
Huh? I'm almost done. I'll be done in like 5 minutes.
How do I determine expiration dates on the contracts? That's a little bit more complex, and that kind of gets into a little bit more of my strategy. If it was a simple answer, I would tell you. Um, in simplest form, again, you have to kind of make sure that you have the right. I can't even get too much into detail, but basically, I would just say buy extra time. Buy extra time. If you think it takes 3 weeks, buy yourself 3 months, and just that's what you should do to start. Um, is MM1 and MM2 different for me? So I've only done one mastermind. The second one, I'm not sure when it's going to be. It'll be similar for sure. Um, the recordings are available for sale, but again, we're not really doing that. But the MM1 recordings are available, and the MM2, I'm not sure when that's going to be, but it'll be similar. My opinion on prop firms. For me, again, I don't want this to be about like talking about prop firms. That's not the point of this. But I'll talk about it because you asked. My top two are Tradeify and Take Profit Trader. Tradeify, I think, is the best out there, you know, unbiasedly. I've been using them, had zero pro. I don't think they've ever denied somebody for a payout. People have just simply not gotten payouts, but they have never denied somebody. Super clean, easy rules. Take Profit Trader, a little bit harder rules, but daily payouts are great. If I do SPX trade on the day, I will not do SPX. Um, you will get an email. What about Nvidia and Apple? If you're in the Discord, I'll post charts tomorrow. Just remind me. If I get MM1. Yeah, so that's a good question. If you do purchase the mastermind recordings, you'll get access to the mastermind chats, which would be the same chats for any future mastermind. So, we have I think 5 different mastermind channels. You'll have access to all of those, and what's included is that honestly, I could be biased, but the most useful piece that you guys are going to get from getting into the mastermind is my watch list. People always say, "How do you find your tickers? What do you do?" I dig, and my watch list is gold. So that's definitely one thing. Again, I didn't really want to talk about me right now, but we're getting questions about it. Um, any other questions, guys? Any other questions? I know a lot of people ask about, can we get this as recording? Yes, it will be recorded. I'm not sure when it'll be sent. Tell a long-term stock. I don't trade long-term, guys. I know what I'm good at. Uh, I actively swing shares. Um, but if you want to buy long-term, buy S&P 500. Can you place the link for the recordings? Larry, you have that, or you want me to get it?
Yeah, I can get it.
All right, cool.
Um, yeah, give me 1 sec.
And so again, guys, the recordings, it's 12 sessions. 12 sessions. They're anywhere from an hour to about an hour and a half each. Kind of the basic beginner ones, which are still not beginners. I kind of put my twist on everything. They're a little bit on the shorter side. The actual kind of meat and potatoes, as I said before, those are a little bit longer. But I wanted to keep them on the shorter side overall because I know when I first was trying to learn and educate myself, I would take courses and sit on video sessions that were 2, 3 hours, and just like school, right? If you sit on a class, it's 3 hours long. You can only retain so much by the end of it. And you have a mastermind questions section, which you can ask questions at any time. So, um, to have a spreadsheet for daily P&L. Are you talking about like for myself or for something for you? For me, I don't really use a journal anymore. I had a journal, but the Discord's truthfully my journal. I just, I post all my trades in there. So, um, I mean, your daily P&L or excuse me, your spreadsheet for P&L, you can just keep it. You can kind of have that Microsoft Doc and just make a separate tab, and you can just put like the dates, and you can just kind of put day in day out. I don't really have something for it, unfortunately, because I don't use that. But it looks like Leary just posted the full bundle in there, guys. And again, that gives you access to all the mastermind recordings, all the chats. Um,
It's options, futures, and access to the full mastermind section.
exactly.
But if you just interested in options or interested in futures, there's I can do that as well. Slight reduction, but again, I'm not trying to sell you guys on that right now. Want you focused on what was displaced or dispersed today
Oh
from
yeah.
Zach.
Anybody have any other questions, guys? We've still got a bunch of people in here, so I'm gonna make sure before I hop off personally that I answer every single question. So, and then we get a couple trickling in here and there, but um,
I do want you guys to sign up for that wait list though. It doesn't cost anything. Just sign up for the wait list because it
yeah,
we
why
give
not?
information, recordings, all that stuff goes through that. So just sign up for the wait list.
It'll be easier. Yeah, and that's the main thing, guys. If you're following my trades, someone's trades, your own trades, you'll at least have a better systematic way to do things. And that's what I always say about my strategy in general. I don't have some secret indicator. Everything that I do is just very organized, very systematic, and it kind of takes bits and pieces from every basic concept, puts into a systematic kind of, I guess, procedure. And that's just how I trade. Any other questions? I'm famous birthday. My boy, the brown guy.
Wait list,
Um,
let's get it.
any
What'd
other
you guys
questions,
think?
guys?
Come on, speak. I know it's late, right? People are putting kids to bed, eating late dinner, keeping calories overnight. Shouldn't be eating this late. Don't eat this late. Kids, sheesh. I know my wife's dealing with three of them downstairs on a boat. What the hell are we doing? Oh my gosh. But how'd you guys like tonight? Can I get some thumbs up or thumbs down? We're very open here. Very open. You can say it was ass. It was great though. I actually took notes. I don't really take notes. Hell yeah. I'm telling you guys, this is a big thing, man. This is you can learn from the goat himself, Zach, but if you don't incorporate the basic things we talked about tonight,
Absolutely.
never gonna get ahead.
Recommendations for tomorrow. I gotta see tomorrow. Um, Most of what I do in the pre-market. I have an idea of what I do in the after hours, but I post all my charts and analysis in the Discord. Um,
Hell yeah, Chris.
I'm not
Uh
sure, Scott. I think so. I'm not 100% sure, but
we'll talk about it, Scott. We'll post something. If you're already in the 1.0, usually we do something for you guys. So just you'll see announcements.
yeah. It seems like, guys, for the most part, though, we're kind of people are trickling out. Seems like there's not as many questions, which is fine, because I'm hoping that with not a lot of questions, it means it was relatively clear. We got the point across, which is what we wanted to do. So again, if anybody does have any more questions, if you're in the Discord, you can tag me at any point. If you're, just a follower on Instagram or TikTok, not sure why you're not in the Discord, but anyway, you can, feel free to DM me on any of the socials, and I'll get to that when I can. But again, at some point, this will be recorded, it'll be processed, sent out. So, hopefully this is good. I felt good kind of getting this off my chest. And even if it can impact just a handful of people and make you guys not blow your accounts, that's all it's meant for me. So, um, that's it. Lear, you got anything else? Or
Hell yeah, no man, that was good stuff. I actually took notes. I'm excited to I love that template.
Fermina said she had an issue joining the group. He or he, I'm not sure.
For I mean, send me a message. I paid my I have issues to join in the group. Send me a message. Leardog. I'm Leardog on in the Discord.
Or you can message me on Instagram if you follow me on Instagram, whichever works. One of us will help you out.
We'll figure it
Um,
out. We'll get you going.
all right, guys. Have a good rest of the night. For those in the Discord, I'll see you guys tomorrow. And I appreciate you guys for tuning in. I know for some of you it's late, for some of you it's early. So I do really appreciate you guys taking the time out of your day. Appreciate the support. Hopefully this helped out. So. Have a good one, guys. See you later.
See you guys. Appreciate you, Zach.